Let me bring Peter on here and see if
sure.
he has an update here. Peter, good morning. Happy Thursday. How you doing today?
I'm great. How's everybody doing?
We're doing good. What do you got for us today? What are you seeing out there?
You know what? Look, we've had, and it's absolutely amazing. On the last day of the quarter, we had this massive $4 billion buy program coming into the exchange, which is kind of baffling for the last day. Normally in a market, in a quarter where you've got nothing but upside, you usually would have profit taking and not huge buy orders coming in. But it's almost as if there's just this massive influx of interest and excitement about just putting money to work in the market. So that was the last day of the quarter. Yesterday, the first day of the quarter, the market did not engage the government shutdown at all. It really didn't care. I mean, the market tells you what it thinks of all this information. That's a big deal. But yesterday on the close, we once again got a $4 billion buy program on the close. So the amount of money that's being put to work and going into the market. Normally, in the beginning of quarters, you do have a big influx on the buy side, but it's almost, the market is not engaging this government shutdown stuff. How long it stays on is the question. But you know what? Historically, normally, the last time, I guess, each year, they usually, in the witching hour, they usually make some kind of a deal. Obviously, the agenda around that right now is not happening. But you know what? Once again, record highs across the board in the market yesterday. So it's baffling to me how much. I mean, we're seeing good volatility, solid volume, 1.3 billion on the tape in New York yesterday. Just crazy irrational enthusiasm around the markets. And you know what? At the end of the day, that's going to pan out for trading futures and trading even a lot of the equity names. So.
Peter, I got a really quick question for you here. Are you expecting any type of change in volume with the Yom Kippur holiday here today?
You know what?
Lighter volume?
No,
anything?
To be honest, no, not at all. I mean, we've been talking about seasonality through August and September. It never showed up. We had tons of volume. We did not have any weakness in the market at all. August, September closed out in super positive territory. And, at the end of the day, sure, I'm sure most of the Jews are not at work today. But at the end of the day, there's a lot. People are probably covering them. And historically, yes, there's been a little bit lighter than usual volume on Jewish holidays. But I don't think we're going to see it today because there's so many moving parts to the market right now that I think the flow is going to be there.
Okay, and then let me ask you one more follow-up question. We talked yesterday about the potential up move in the market being related to inflows for the first of the month, and sometimes that can really kind of carry over to a second or maybe even a third day, depending on how much buying there is to do. You spoke about the buy program right there at the close. Is that part of the reason why we're looking at a positive move here in the pre-market this morning? Do you anticipate that to hold here today?
I do. Yesterday we opened down, right? Basically that emotional reaction to the fact that the government shut down and people weren't clear how much that was going to impact markets. But almost within the first hour of trading, it completely reversed. And we spent the rest of the day going towards record highs, which is where we closed. And so, the influxes on the close have been sizable coming the last 2 weeks of that quarter. And as I said to you, normally in a quarter that's really bullish, you would normally see profit taking at the end of it. Funds are judged and graded on what their P&L looks like at the end of the quarter. And sometimes they want to lock in some of the profits because they don't know what's going on. They don't know what the impact, how long this government shutdown is going to last and the impact on the market. They don't know about tariffs. Still, we're starting to see a lot of impact on the consumer, on consumer spending, consumer confidence by tariffs, right? We are seeing a huge spike in costs and expenses. Some are being absorbed by the companies, some are not. Walmart, Target are absorbing some, Amazon also absorbing some, and then some are passing it on to the consumer. The volume we've seen is significant. It's really, look, beginning of every month, you're going to see allocations come in on the buy side. But when you've got so many potential looming things that could dislocate the market, at this point, it looks like nothing can dislocate this rally. It is absolutely baffling. And they're not only just buying equities and futures, they're buying everything that's not locked down. I mean, as David said, the spectacular move in gold is extraordinary. Normally, gold is a flight to safety. When markets go up, people are putting more pressure on gold. They're buying gold. They're buying equities. They're buying everything that's not locked down. So a sizable volume.